Interesting lineup you have coming up too.
Oh, we do have. Yeah, it's gonna be so good the next few weeks. Hello, everyone. Thank you for joining us.
Well,
Today, I've got a
hello.
really good topic. I think so many people are interested in this. You know, what's happening with the real estate rates. I mean, it keeps going up and down, up and down. You know, really, it went way down to almost like free money. So
Yeah.
I've got here Felix Chan. He's a longtime mortgage broker and also a realtor in Calgary. And I think, you know, I've been following you for a while, creeping on your
Yeah.
on your YouTube channel. Like, you create some really good information that I think a lot of people need to take note of, right?
Thank you.
Tons of value. You know, even I learned from you, and I've been in the industry for a long time, you know, just constantly learning. So welcome, Felix.
Thank
Um,
you. It's a pleasure to be here.
yeah. So, and in the next few weeks, I've got really great lineup as well. So I've got a financial advisor, my accountant, and someone from Now Radio who's going to talk about broadcasting or branding your business and stuff. So we've got some really good lineup coming soon. But today we've got Felix Chan, who's going to go through some mortgage information, rate updates, do's and don'ts, purchase plus improvements, which I don't think a lot of people know about, right?
No.
I feel like only realtors might know about it, but we don't, it's not something that we kind of preach or tell people about it unless the topic came up. Credit's really important, and I think you do a really good job of educating people on that. And this is an interesting topic: how to guess where fixed rates are going. Now, I don't know
Yeah.
how you're going to do that, but let's
Well,
go.
I'll have to pull up my crystal ball. Yeah, no, there's some interesting topics that I wanted to cover today, and it's really I wanted to provide as much knowledge and valuable information for the everyday borrower, whether you're looking to buy something soon or you're even in the middle of the process. There's always something to be learning, and I've been in the business for 10, 11 plus years, and I'm still learning on a day-to-day basis. So I hope to bring your viewers lots of value today. So
Awesome.
yeah.
Awesome.
So I guess the first thing I want to talk about is rates. Now, I'll be very honest. It's not something that I really put a lot of emphasis on because a lot of people just focus on that. And I think that kind of holds them back from looking at the bigger overall picture, which is, I do acknowledge that rates are important. However, it's not everything. The features and most importantly, the restrictions of rates or of your mortgage is just as important as the rates.
For sure.
So just for the sake of going through rates, chartered banks you can find today, a 5-year fixed. If you're putting now, these are rates for if you're putting less than 20% down. Believe it or not, when you put less than 20% down, your rates are actually lower. But if you put 20% down or more, your rates are actually higher. I don't know if a lot of people really know that, but
I
it's
don't think
just,
that's a common knowledge.
yeah. So surprisingly, it's kind of counterintuitive, but that's just the way it works. But for a 5-year fixed, putting less than 20% down, charter banks are offering around 2.09%. And for the variable, 5-year variable, you're looking at, about a 1.35%. Conventional rates, meaning if you put 20% or more, they're usually about 0.10 higher. Now, here's the truth about rates. Whatever your broker or your bank quotes you, you're going to be able to find a lower rate anywhere else, because there's always going to be that one lender or whatever that undercuts everyone else. But just like life, whatever, you get what you pay for. The same is true with mortgages. And how that's relevant is what you pay for in terms of a lower rate, you sacrifice some of the features on your mortgage. For example, your payroll penalty could be massive. And for those that don't know what a payroll penalty is, let's just say you get a 5-year term mortgage, right? You're going into a contract for 5 years. Now, anytime you break a contract, even your cell phone, you're going to have to pay a payroll penalty. Well, mortgages are no different. And so your payroll penalty could be really big if you go with, potentially, if you go with a lender that's not so known, you're getting a much lower rate, but you do sacrifice on some of that flexibility. Another restriction could be something like, you're not able to pay down as much towards the principal as you would like, or you may not be able to refinance your mortgage unless you do it with the current company you're with. And at that point, if you need that equity, then you're at the mercy of whatever rates they give you. So rates are important. And, being a mortgage broker for, 11 years now, I've never put myself in like the lowest rate that I can find, because I do value just the normal features of, a chartered bank. And, rates are so low these days that like,
it doesn't really make a difference, hey?
Exactly.
So if someone's looking to get a mortgage, what do you advise them to ask? What are the most important questions to ask?
Well, the most important things is, what your payroll penalty would be. And what are some of the features of the mortgage that I can take advantage of? So for example, like your principal pay down, can you increase your monthly payments? And if so, by how much per year? Can you pay down towards your principal? And if so, how much per year? What is the fine print? What are some of the restrictions of the mortgage that I'm getting that I need to be aware of? Those are important things, but for a lot of these things, it just kind of goes over over people's heads just because they don't do mortgages all the time. So the best thing to do is really work with a mortgage broker so that they understand, what are the standard features with the lenders that they work with, and someone that can explain what the restrictions or some of the things you have to look out for. In other words, the fine print, if you just wanted purely a low rate. Again, it's not something I've ever put myself in, nor would I ever. And I don't really recommend that necessarily with my clients that I work with. But, some people just are driven by that, and you just kind of need to know what you're getting yourself into. Yeah,
I guess you just have to let them know what it is, and they have to decide for themselves, right? It's just like us, as realtors, we can recommend, but it's completely up to them.
Exactly.
That's it.
Yeah. So now, if I may, Catherine, I want to talk about what a lot of people are talking about these days, which is the upcoming stress test. Okay. Mm-hmm. So I want to be very clear. It is a proposed stress test. It is not in place, not yet anyway. Okay. And the thing that a lot of people miss is that, well, first of all, it's a proposal that's going to come into effect June 1st. And it affects mostly with those with 20% down or more. Now, the current stress test, people have to qualify at a rate of 4.79%. And right now, the proposal is that it's going to be what you have to qualify, if it goes through, is what's called the contract rate, which is what the rate the bank is giving you, plus 2% or 5.25%. So whatever's greater, which in most cases right now is the 5.25%. So
wow, that's really going to affect affordability.
Yes, I actually don't really think so, because what that really means is it really reduces those putting 20% down or more. It reduces their buying power by about 4.5%. And what our brokerage has seen is that those people putting 20% or more, they're not really maxing out their debt service ratios or maxing out their limit when they're borrowing.
That's
On
true.
the other hand, sorry?
That's true. That's true.
Yeah.
They usually are qualified for this much, but their comfort level, they usually tell me, oh, we just want to spend this much. So yeah, that's totally true.
Yeah. Now, on the other hand, for what we find is that for those who are getting an insured mortgage, meaning less than 20%, those are the kinds of borrowers who kind of max out on their limits. So what is the effect going to be when they implement these rules? Based on what we see here, I don't think it's going to have a very minimal impact. I think so. It's very important for people to understand that it doesn't affect everyone. It only affects those that are putting 20% down or more, and even at then, it reduces their purchasing power by about around 4.5%.
Yeah, good to know.
So, yeah. Because we get a lot of calls from people freaking out, and they're like, "Oh my God, we need to buy something right away," and they're kind of FOMOing into the market.
Yeah.
But it doesn't necessarily affect everyone. So,
Okay.
So yeah, I guess that kind of leads me to another thing that I want to talk about, which is, I get calls all the time from people asking me, "Hey, Fee, I want to wait to buy a home," and you probably get this all the time. "I want to wait to buy a home because I want to save up 20% down so that I don't have to pay the mortgage default insurance." And although that might be true because everyone likes to save money, it might not necessarily serve you in the way that you think it would. So I guess one of the things I just want to say is you never want to stretch yourself so that you're putting everything that you have in your savings towards a down payment, leaving yourself with little to no savings at all. And then all of a sudden, you're going to be living paycheck to paycheck. I always recommend to have at least 6 to 8 months of expenses saved up. And this includes your home costs, your mortgage costs, like your property taxes, your mortgage, your home insurance, utilities, all those things, plus your lifestyle things and things that you need to live, right? Like your groceries, your monthly gym membership or whatever it is, right? Because you never know if a coronavirus is going to come and hit the market, and you could be out of a job. And if you're living paycheck to paycheck with no savings, that's a very dangerous game to play. Now, there is an opportunity cost to your money, however you allocate it. Now, mortgage default insurance, the premium that you pay changes in increments of 5% down. So if you put 5% down, your mortgage premiums are higher. If you put 10%, it goes a little bit lower. 15%, the lowest, and then 20% or more, you don't have to pay any of those. So just to put this into context for your viewers, if you put 15% down, your mortgage default insurance rate is 2.8%. Okay, 2.8. So now you have to think, okay, well, if I took that extra 5% and even paid that 2.8% in premiums, can I take that money and put it in the stock market or crypto, because crypto's going to the moon right now, and earn more than 2.8%? Most people would probably say yes. So that's one way to look at it. Another way to look at it is, and you might do this in your practice too, Catherine, is, when we help people with their real estate. Oh, and by the way, I'm a realtor and a mortgage broker, so that's why I'm talking about real estate as well. When I'm asking my buyers, about their home, one of the questions I always ask is, what is your plan with this home? Is this a 10-year plan, a 15-year plan, 20-year plan? Because the truth is, you're never going to be in this home forever. But if you know what your tomorrow looks like, you can start planning for, things today. And so if this is going to be a 15-year plan, then the 2.8% you pay over 15 years, it's immaterial. It's really nothing, because in theory, real estate prices should always be going up. And that's really for two main reasons. Number one is inflation, right? Inflation for costs, materials, as well as labor. And of course is scarcity. So in 15 years, you'd pay that 2.8%. It doesn't really amount to a whole lot. Yes, you do pay a lot more interest over that time. But to have a safety net, to be able to buy the furniture you want and not sacrifice the lifestyle just to buy this home makes a lot of sense.
There's a way to counteract that that premium too, though. With like you said before, with the extra payments towards your mortgage. Oh yeah. Man, like it could be little, but if you've ever looked at the schedule and how much interest you pay, that extra $50, $100 a month makes thousands, hundreds of thousands in difference in how much you're going to pay at the end of the day. Right?
Yeah, so absolutely.
Nobody really looks at that. And I think people just overlook that.
Yeah. I mean, if you just made one extra monthly payment per year in your first 5 years, you would shave a few years off your amortization. So it would go from 25 to like around 23 or so. And not a lot of people know that because it's one of those things where you just kind of set and forget it, right? And people just don't really look into that per se. Yeah. So.
But that's like your biggest debt. So if you've got extra money here and there, you might want to put that towards your mortgage, unless you've got another investment that will give you a higher return, right?
Yeah, exactly. So
let's talk about purchase plus improvements. This is also something that nobody really knows about. Right. And as realtors, we typically don't even really talk about it unless you're someone who's like, hey, I want to buy a house and it's okay. If it needs some work, I'm okay with that. That's probably the only time that I would talk about that with a client. So do you want to talk about what that entails?
Yeah, for sure. So this is going to benefit both buyers and realtors. Now, the Purchase Plus Improvements is a mortgage program, and it's really designed for those who want to do renovations once they take possession of their new home, and basically add the cost of the renovations to the mortgage. Now, according to CMHC, 37% of people don't know this program actually exists, and it's good for realtors because when inventory is tight and you can't find that modern contemporary home that you're looking for, and you're only seeing, properties that need a little bit of love, this opens up the doors for more options, and it helps the realtors establish more of an expert status for their buyers, just because of this, because of these products that are available out there. And for buyers, it doesn't take a whole lot to update a home. I mean, low cost items like flooring, paint, baseboards, maybe repainting the door have high impact on the way it feels when you do those renovations. So, and obviously you open up a lot more options as well too. Sure. This program, you can do improvements to the home, such as, the things I mentioned, maybe even windows, because that's a really big expense.
Adding a garage.
Yeah, a detached garage, exactly what I was going to say. But it doesn't include appliances because it's not actually part of the home, right? So that's very, very important to know. Because I've had people ask me, can I get a Wolf appliance and, spend, $10K on, on a stove and stuff like that. And no, you can't do that.
If you can afford a Wolf, you probably shouldn't need this.
Yeah, exactly. So the program requires you to put at least 5% down. Okay. And most of the time it does limit, the amount that you can borrow is kind of limited to up to 20% of the as is value, meaning the as is value is the condition of the home when you purchase the home. Okay. So how it works, it's pretty simple. Once you find a home, then when you submit your mortgage application, you have to submit the quotes for the renovations. Now, the cost of the rentals will be added to your mortgage day one when you take possession. Now, when you take possession, the borrower will have to they'll have to come up with the cash to pay for the rentals. You can either use cash or maybe a line of credit, or a gift from parents, or maybe even if it's a general contractor, maybe they would be okay to wait until you get the funds back. Now, once the work is complete, you would call your mortgage broker, and your mortgage broker will send an appraiser to your home just to confirm all the work has been complete. At that point, the bank will instruct your lawyer to release the funds back to them. And you typically have about 60 to 90 days to complete this. So,
and sorry, is there like phases that you release funds, or is it all or nothing?
There's one-time draws. That's usually up to 20% of the as-is value. And it can actually be more than 20%. Anything more than 20%, they have to approve it. And you can get a few draws from that, depending on how large the mortgage is.
Okay.
Yeah.
Okay.
So, yeah, it just offers a lot more flexibility. I'm actually working with buyers right now. They're looking for infills because it's new, shiny, and modern. But there was a property in the suburbs that came up, and that's all they did. Floors, paint, baseboards, all the doors and all the door handles, right? They just kind of made it all neutral colors, and it looks fantastic. And I'm like, hey guys, you can do this too. Like, it doesn't cost a ton of money. It's low cost, but high impact.
Yeah. Yeah. So what are we going to, here's the interesting topic that I've never really looked into is how do you guess where the fixed rates are going to go?
Yeah, it's a great question.
Where do you hide your magic crystal ball?
Well, I guess, yeah, not a lot of people know this, but fixed rates are correlated with where the government of Canada bond yields go. So, I mean, I can't say you'll know where rates are going to go, but at least by looking at the chart, maybe doing some technical analysis, if you're, in the stock market, maybe you'd be able to kind of know or get an idea of where it's going to go. So if you want to, and I'll stick a link that your viewers can go to in the description after this, awesome. Where it pulls up the the government of Canada 5-year bond yields. So if you want to see where the 5-year fix is going, look at the 5-year bond yields. If you want to know where the 3-year fix is going, then you look at the 3-year bond yields. They do move pretty close to one another. And so if you kind of want to have an idea of, what it's been doing, what it's doing now, and if history is any indication of the future, you can obviously try to guess where it's going to go. And maybe that would affect whether or not you buy now or buy later. But at least you have that extra tool in your toolbox to make an informed decision. I mean, at the end of the day, no one really knows, but some people really nerd out with these kind of things. So, it's good that people have
you being one of them.
Yeah. How did you guess?
The glasses gave it away.
Yeah.
Okay. So with knowing that, do you see the rates changing this year?
I mean, right now, and like I said, I'll post a link in your description here. It's been staying flat. And, lenders are so busy right now that, for example, like Scotiabank, they actually raised their rates. And I think they did it because they just needed to slow down the amount of people in the queue. What used to take, 2 days to approve is taking like 4, 5, 6 days, depending on how complicated the application is.
Yeah.
So, you have to ask for 10 business days for condition these days. And if you get an offer like I did last night where, the condition date is like, 6 business days, say, I don't know if you can get approved by then. I mean, yeah, you can get the condo doc review and the inspection, but the financing is one of the most important things. So, for your realtor viewers out there, ask for the 10 business days. Even in a multiple offer, like what I went through yesterday, 10 business days, it's just what you
and I think if
to
you're in the industry right now and you're representing buyers, or you're representing sellers, if somebody gives you a 1 week condition, you kind of like need to do a double take and go, are you sure?
Yeah.
Right?
Yeah.
I have done that, and I'm going, really? Like, you're like 100% this financing is good, like, because we are seeing a lot more time. But they're okay. So I'm like, sure.
Yeah.
1 week works for me. Right?
As a seller agent, yes, 100%. Is it realistic? I don't know. I would probably expect to go back. I mean, I would set up, I would just let my seller know and say, hey, listen, like, they might come back asking for, an extension. Just be prepared for that, right? So.
Yeah, but it still gives you that extra time to wait for another offer. So it's good.
Yeah.
Not so good as a buyer.
Yeah. And I was just curious, Catherine. So I don't know what it's like in Edmonton, but the city of Calgary is really pushing people to legalize their secondary suites or like their basements. Is that the same in Edmonton?
I haven't. I haven't heard about a push for that. I know there's like all the new developments. There's just so many more that have that option available now, because before, like, there wasn't really, it wasn't really a thing, right? In new development, right? It was more towards the core where population was a little bit more dense, right? So there's a lot of illegal basement suites, but really not a lot of people really care, right? But in the new developments now, everybody, even if they aren't interested in themselves, a basement suite, they are thinking that in the future, it would probably be a good idea to have that option available. So they build their house with the side entrance, separate entrance, going down to the basement, as well as making sure that the rough-ins are in. So, but I haven't heard about any push to legalize basement suites that aren't already legal.
Yeah. That's different here in Calgary. Like the city of Calgary has been pushing people to legalize their suites for a few years now. And because of COVID, they've actually extended the deadline for people to legalize them. And Rent Faster, which is, I don't know if they're big in Edmonton, but they're pretty big here in Calgary. Yeah. They've actually came out saying that they're not going to be listing properties with illegal basement suites or secondary suites.
Oh, okay.
Yeah. So,
they're big here too. Like that's basically my main rental site that I go to.
Yeah. And for all the landlords out there, I've used Facebook and Kijiji and Rent Faster. And, I've gotten a ton of inquiries, even for my own rental on Kijiji and Facebook Marketplace. But I find more quality tenants from Rent Faster. So that's interesting. I don't know.
Because they kind of pre-qualify the tenants already. They have like a questionnaire and everything. It's just so much better, right? When they apply for your to rent your place, all their details are already there. It's great. It's a really
Yeah.
great site. And that's where I throw up my rental listing as well.
Yeah. Yeah. No, that's awesome. And so what a lot of people have been doing is they've been legalizing their basement suites. I did mine for my rental a few years back, well, last year, and we've helped other people do that too. And the reason why I'm bringing this up is because, for those, if you're a first-time home buyer, and like what I said earlier, if you know what your tomorrow looks like, you can start planning for that today. And so if you see real estate as an asset for your retirement portfolio or to just build net worth, it is a great way to get into real estate. Buying a property with a legal basement suite versus a condo, right? I mean, even with COVID, instead of people wanting to live in space, right, a condo, they want to live with something where they own some dirt. And plus you get the highest and best use, and you'll get, your return on homes on dirt will always be much greater than condos. So one thing that, I've helped some first-time home buyers do is knowing that goal of wanting to own real estate as an asset for the future. Why not buy something where it allows you to do that? So I just kind of want to give you an example here. So, if you were to buy something like this, like for example, a bungalow, and you wanted to live up or rent down, or if you wanted to live down and rent up because you can get more rental income. Now, how that would affect you is instead you can use that rental income to offset your mortgage, so that now, before, you can only afford a condo, but because of the rental income it brings in, now you can afford something that could be, maybe $100,000 or more. So if you're using that rental income, it definitely benefits you. And I want to give you a quick example. Here in Calgary, if you were to live up and you rent down, I mean, a one bedroom downstairs, you can rent it out for about $750 a month. Now, $750 is a payment equivalent to $177,000 mortgage. Okay. So think about that for a second. If you spend an extra $177,000, not only can you buy dirt, but you have someone that's basically paying it off for you. So you're in the same position financially, but better, because now you own dirt versus air. And if you wanted to do the opposite, live down and rent up, here in Calgary, you can get about, $1,250. $1,250 is a payment equivalent to a $284,000 mortgage. So you can see how powerful it is. But just by simply knowing what you want, working with the right agent to be able to help you find these kinds of deals, running the numbers, and working with a mortgage broker that can get it all done for you and basically bring it all together.
Wow. Thank you so much, because I'm constantly pushing my first-time home buyers into something like this. When they're like, oh, I want to buy a condo, or I want to buy a townhouse, and I just want to live by myself. And I'm just like, well, buying a bungalow with a suite, you're still basically living by yourself, just like a condo, right? It's just that you're collecting rent. This person's paying you rent, and you don't have to live with them, right?
Yeah.
So yeah, no, thank you so much. And anybody that's worked with me before who are first-time home buyers, I absolutely tell them about this option, and going, if you just pay a little bit more, you can like in some cases, depending on how much down payment, you're living almost mortgage free.
Yeah.
Right.
You reduce your living expenses by half or more.
Yeah.
But the one thing that, like, I'm a big believer in that, right? And so, like, when I was
Me
young,
too.
I'd be like, yeah, let's do it because it just makes financial sense. But what I've realized is not everyone is like me or
Yeah.
you, right? Like, it just makes complete sense.
It's
But
because we're Asian. We're all about the numbers.
yeah, so true. But what it really comes down to is what is more important to you? Is it lifestyle, right? Something that's new, shiny, somewhere where, it's hip and, it's cool to hang out, or is it wealth creation? And a lot of, I mean, not to discriminate, a lot of the females that I work with, especially when I'm working with couples, the females want the lifestyle. The males want more like, I want to add value. I want to make money, blah, blah, blah. That's one thing that I've always kind of found where, where the biggest difference is. But as a couple or even as a single individual, you really have to think like, what is more important to you? Is it more lifestyle or is it wealth generation? And what you look for, and a lot of people will say, well, I'll just buy a condo and it's going to be a great investment. Well, that's not true. Like, it is far from the truth. And the reason why is because what you look for in a rental property is completely different than what you look for in a home.
Correct.
And so, and the reason why it pays off over the long term is by one simple real estate principle, which is when you buy dirt, you're getting the highest and best use out of that land. Now, for those that don't know what the highest and best use is, it's a term in real estate that means you're getting the most value from a piece of land. So as an example, really quickly, let's just say a developer comes downtown, buys a city block, builds a 40-story high-rise building. Well, they're getting the highest and best use out of that building or out of that land because you can't add any more value to that. Mm-hmm. Whereas if you bought a condo in that building, then you're buying into the highest and best use. There's really not much more you can do to add value to that condo. I mean, you can do renovations maybe like 10 years down the road, but then, you're competing with all the other units in the building, plus all the other buildings like in the surrounding area. And so, when you buy dirt, like you can get the highest and best use. And for, if you bought a bungalow in the inner city, like I have 4 tenants on my one property. It's a 50s bungalow. I have tenants upstairs, downstairs. It came with a single detached garage, which I'm renting out. And then I purposely built an oversized double detached garage. My mortgage on that was about $115, but I'm renting it out for $275. So for me, like it just get the highest and best use. And you can do that in one of 4 ways. You can, rent the crap out of the property, like what I'm doing now.
Yeah.
Well, and by the way, a lot of people don't know you can rent your detached garage as storage. Yeah. People don't know that. Here in Calgary, if it's a double detached garage, drywalled and insulated, you can get $250 a month. Easy. All day long. I've never had any vacancies in my garages. And so you can rent it out. The second way is, you could strip everything down to the studs, renovate it, and then sell it. Third, you can tear it down, build, a duplex, or 4, you could rezone it to maybe a commercial, or and build a commercial building, or build like row townhomes. Right now, the city they're turning corner lots into 4 townhomes, and yeah, like that's just the way things are happening here. Is that the same over in Edmonton?
Oh yeah. And garage suites are trending as well. It's not for everyone because the price tag that it comes with is still kind of probably about the $150,000 to $200,000 range on average. You can exceed 200, but that's garage and suite, right? So not everyone can afford that, but for those that can, it's such a great investment. Yeah. And your rental is just right behind you, right? Is that something that's big in Calgary?
Oh yeah. There's just like you see them coming up kind of everywhere now almost. And it's funny because I have a friend that works with the planning development department at the city. And last year, they have never been that busy during COVID. Because people are like, oh yeah, I want some more space, so let's just build in. You know what I mean? But even if you you got to think about the economics. Let's just say it costs you $200K. Well, $200K, your mortgage on that is gonna be like $900, maybe just over, around $900. But you can rent that out for more than $900, at least here in Calgary. Like a 2-bed, 2-bath suite, a little bit on the smaller end, but. You can definitely get more than $900 here. But here, like the cost is a little bit more. You're looking at like $250 to $300K kind of thing.
Okay.
So, yeah.
No, I mean, maybe the prices have increased now with the insane lumber prices.
Yeah.
But it was typically around 150, 200. But 250, you're getting a really nice one. Yeah.
Yeah.
Sure.
Yeah, that's awesome. It's just there's so many ways to get the highest and best use if you just own land, right?
Yeah,
and,
for sure.
And I don't know about you, but I'm finding a lot of people asking me about homes, and they're not using this term, but what they're looking for is a multi-generational home.
Mm-hmm.
Right?
I live in one.
Sorry?
I live in one. We built our house with a suite on the main floor.
Yeah.
For my in-laws. That's like huge now because I think mainly because A, affordability, B, childcare, built-in childcare. That's what it was for us. It was the childcare.
Well, you say like that alone is like a mortgage payment. So you might as well save that by building something custom to make it a multi-generational home, right?
Yeah. Like that extra was probably equivalent to $200,000 to have that added on, but that also increased the size of our footprint, right? That's why the cost. It wasn't just that extra. I think it's about 650 or 750 square feet. I can't remember.
Yeah, but
it's not just for that. It's just because it's on the main floor, so the foundation had to be there as well. So our basement's huge, but that allows me to house my staging furniture.
Nice. So what's are you in a bungalow too, or is it
no 2-story?
Okay. So
they just have a little, I can't remember how big our main floor is, but their portion is about 650 or 750 square feet. And ours, I mean, you couldn't tell that we have a suite. Like our main floor is still a good size.
Oh, I see. So they're just taking up a little bit of your main floor space kind of thing.
Yeah. Yeah.
Oh, I see.
So I would say they probably take up 1/3 and we take up 2/3.
That's interesting because I mean, for in-laws, right? Like parents are getting older, which is, a reality we all kind of have to face. And now like some of us are like, okay, well, we have to take care of our parents. And so having that one level home makes so much sense. And, it's just, there's more benefits because the kids will benefit, the grandparents will benefit, and there's just more love to be around, right? And who doesn't want that? That's just so important to be happy. So
yeah. So ours is kind of a unique situation, but most multi-generational, they'll have that suite in the basement, right?
Yeah.
I actually saw a listing the other day where the suite is on the 2nd floor. I think that's like definitely had to be a multi-generational and not like an income property, right? It definitely looked like a massive house, kind of like a castle. And I was like, 2nd floor suite. Wow, that's different.
Yeah, we're seeing, I'm seeing more elevators in homes now. Small elevators, not huge, right? Before you used to see them in like ultra luxury homes.
Yeah.
But, working with one of the builders, who one of my clients were interested in a multi-generational home, and obviously just having to deal with stairs. One of the ideas was to throw an elevator there. The cost, I mean, this was probably about a year ago, was it wasn't too bad, like 35K.
Oh, I heard like 50K when I was building, because that's something I kind of considered as well. But it was probably the maintenance costs that kind of scared me.
And that's unknown. Like I'd be scared of the unknown, because I mean, it's not that popular right now.
Exactly.
That there's just not a lot of competition for the main companies out there looking after elevators. And so that would be one of the things that I'd be very interested in knowing is, what are the maintenance costs? Like, how much do you have to allocate per year to maintain it, to replace parts? Because I can't imagine it being cheap.
No,
Yeah, at all.
when there's no competition, right? So yeah, that's kind of the one thing that's like, oh, it'd be really cool and it would solve our problem, right? We had to build a bigger house to have that suite and not make our space look like, an apartment. So
yeah.
So, that's something I definitely considered. But then, the unknown cost, I was like, forget about it.
Yeah. And not only that, but, if you needed to replace a part, you probably have to order from Europe or something like that. You know what I mean? It's not going to be something that you could just walk to Home Depot and just pick up. And so if someone is dependent on that, now what? You got to throw over your shoulder and just go up the stairs.
That ain't happening.
Yeah. So, but it's interesting. I think as time goes on, I think there's going to be a lot of changes to real estate trends. I think one of those things is,
those changes are already happening though.
Yeah.
Like everybody I talk to now is like, we're going to have this basement suite roughed in just in case.
Yeah.
Because circumstances change, right? People are losing their jobs, right? To have that available.
Yeah.
So sweet. So sweet.
Yeah. So, I think there's going to be some interesting changes that we're already seeing, right? Multi-generational homes. And I think more people are going to be more accepting of that trend just because of affordability. I mean, some people don't have a choice. Yeah. But I think it's a great thing just for humanity, because now it just brings like people closer together, families closer together, right?
Yeah. Well, in Asian culture, they took care of us. Now it's our time to take care of them, right? Yeah. And that's why you do see a lot of the Asian families that, they all live together, right?
Yeah.
So, yeah. It worked out for us. We love it.
No, that's amazing. That's amazing. I was just curious, we kind of talked a little bit about cryptocurrency before. Have you ever, are you big into crypto or blockchain or anything like that?
No.
Okay. No. I was just curious because, kind of diving into crypto the last few months, I think, and speaking towards, the change of the real estate industry, I think the blockchain technology is going to have a massive impact on real estate.
Oh, really?
Yeah. I'm not sure if you know how it works, but everything is transparent. You can basically go to a blockchain, and in the blockchain, I would imagine that, every house will be on the blockchain. And within the blockchain, you'll be able to pull up all this information about the home. Land titles could probably be on there as a service. Our
land titles is public. Anybody can go in and buy it. We go in, we don't have any special services that's exclusive to us. We go on public site and go buy our titles, right? So that's already all public. The only thing that's not public really is sold. You can go look at what it previously just sold, but you're paying a lot of money, and we kind of just prepay for that, I guess.
Yeah. It's just an interesting technology that I think is going to bring a lot of transparency to the real estate industry, and consumers are going to have a lot more information that they can't get access now unless they spoke to a realtor. So it's going to be very interesting to see like how that kind of plays out. And I think it's going to hit the real estate industry a lot sooner than people think.
Yeah, I think that's really dangerous with somebody who doesn't know everything that goes into how things are valued. I think that's very dangerous for some people, right? So, even like there's appraisers for a reason, right? Because appraisers and realtors, like we could come up with very different values. So unless we know how to evaluate, all the things that actually increase value versus the things that we think
perceived value.
Yeah. Right.
Yeah.
Like it's totally different. And obviously it's very subjective. Right. But I think that's a very, very dangerous road for people who really aren't in the industry. Right.
Yeah. I mean, some people are okay, not using a realtor and just kind of going off of their gut, which is not something I would recommend. I mean,
I have a really bad story, and this is family. So my aunt just recently, she wasn't even thinking of selling, but all of a sudden she saw, in the Chinese newspaper, a realtor had a listing on there, and she called the realtor and said, "Hey, do you have clients who want to buy my house?" She didn't tell me about it. And by the time I found out from my mom, I called her and I was like, what are you doing? You're selling? Like, what are you doing? She's like, oh yeah. My house is so old. Like all these things I have to fix and all that stuff. I'm like, okay, let me just take a look at the comparables in your area. Oh my gosh. I was livid because she was taken advantage of. Like she was getting offered $40,000 under what the average was in the area, and she's just like, it's okay, so many things need to be fixed, and I'm just like, oh my gosh, like,
yeah, it's too bad.
And that's family, and I was just like, let me take a look at your contract. She's like, it's okay, I already signed everything. I'm just like, oh man.
Yeah, it's too bad. I mean, people do get taken advantage of, right? And they just don't understand. I don't think the general public understands the complexity of contracts, negotiations, which is a very important thing. And even to what you just said is just valuation, making the right adjustments for to come up with the value of a property, because you can take a little or a ton of money off the table. And if you're not working with people you trust that's actually looking out for you, you can get royally screwed. So I'm sorry to hear about that, Catherine. That's terrible.
Yeah, no, I think the realtor probably, no, it's an active listing, like just beside her. She lives in a 2-story, and she's like, oh, my next door neighbor's house has been all renovated, and they've got new this, new that, and they're listed at like 400. And she's like, or just over 400. And she's like, well, my house is like all crappy. How am I supposed to get more than that? And I'm just like, you can't compare your house to hers.
Yeah.
You live in a 2-story. That's a bi-level. So I don't know. If you're not doing the right, that's why I said, it's dangerous for people who aren't in the industry and start to have all this information. If you don't know what you're doing, it can cost you, right?
Yeah. I mean, having information is one thing, but understanding how to interpret it into a manner that benefits you or outlines, some of the risks involved or anything like that. It is a dangerous game, and you might not know the market as great as you think. And the worst case, you take money off the table, or a lot, right? The best case, you make a little bit more. But the choice is up to people. So.
Yeah. All right. Do you have any other things that you want to add?
Well, if there's any viewers that actually watch this 55-minute video, kudos to you. You must be really bored.
No, man, this was jam-packed, full of really, really good information. I'm good. I know I'm going to hear about it from some of my friends. I usually get, messages later after or comments on the replay, and people are like, holy cow, like, thank you. Like, awesome. Even if we were able to help a couple of people, like, this is why I do these chats, right? It's to provide information to help people. Obviously it's, it'll probably help people that I bring on as well, right? So, but for the most part, it's to add value, right?
Yeah.
Because who doesn't own a home, right?
Yeah.
Who isn't affected by credit? Oh, we didn't really talk about credit.
No, we didn't. But I will, if I may, I will leave one last thing, one little tidbit of advice that I think is relevant to all borrowers, no matter what age you are, how much money you make, anything like that. The one exercise I always do with my mortgage clients is a budget exercise. And the reason why it's so important is because if you don't know how much you're spending on a monthly basis, how do you know how big of a mortgage you can afford? Buying a home is fun, exciting, and great, but you shouldn't have to sacrifice too much of your lifestyle just for that home. So I always recommend people to, do a budget exercise, write down all the items that they spend, right? Even one-off things that you never think about, like maybe wedding gifts, birthdays, Christmas, vacation. I mean, a $5,000 vacation budget for the year is about $450 a month. So it's a pretty penny. And people don't really know how much they actually spend. And even after doing the exercise, people realize that they actually spend more than that because
absolutely.
We blow money all the time.
Who does their budget and actually comes under?
Exactly.
Nobody.
Exactly.
Right? You never think of all those little things that you spend. You're like, oh, it's just $1, $2 for that coffee, right? But $2 a coffee every single day, that's $60, $75 a month.
Yeah.
Right?
Yeah. For sure.
So yeah, all those little things that people don't think of, it totally adds up. So thank you for that. Guys, budget, right? Be Asian.
Yeah, that's right. So
okay, thank you so much for talking about all this, giving us so much value in this session.
Yeah, thank you.
If anybody has any questions, put it in the comments, send me a message. I'm sure Felix will be available to answer questions in comments, or you can direct message him as well. Although you're not on Facebook Messenger a whole lot, so
no, I'm not. Well,
I will let you know if there's a comment or whatever.
Thank you. We, if you guys have any questions, you can find me on YouTube. The real estate team I have is the Live Inner City Real Estate Team, or you could just Google my name, Felix Chan, Calgary. There's going to be no shortage of links and stuff like that you'll find on me. If there's anyone, interested in purchasing real estate here in Calgary, whether you're a first-time buyer, seller, investor, I'd be happy to help you guys out. And lastly, I just wanted to acknowledge you, Catherine. I think what you're doing is great, to be able to, bring all this educational content in all different varieties, but all relevant to your viewers, your homeowners, your first-time buyers. I think what you're doing is amazing, and I just wanted to acknowledge you for that. Thank
you so much. Hopefully somebody, it's funny, we didn't get any comments at all today. We've had quite a few viewers on and off. So who has an hour, at noon? Yeah.
Well, like you said, even if one person gets something out of this, then, I'm very satisfied with that.
Awesome. Well, again, thank you. And bye, everyone.
Bye.